Let's talk about why accounting firms are laying off mid-level staff. You hear all the time about big corporates, and some of them are being the big four firms and even mid-tier accounting firms who are laying off staff. Maybe they overhired during COVID and wanted extra capacity, but we know how the game is changing. This is the second episode in our 6-part series on the broken career ladder in accounting, and there's a lot of things changing the game. For this episode, I want to move on to the next rung of the ladder up in the hierarchy, the org chart, the career structure. And today I want to answer a more disturbing question: why are firms cutting experienced staff who did everything right? In that episode, we looked at how automation, AI, rising education costs, it's shrinking the junior, more traditional roles, and it's leaving new talent with fewer ways to get a foot in the door. We're essentially equipping you to have your hands on the steering wheel of your own career, if possible. Let's talk about why accounting firms are laying off mid-level staff. You followed the rules, you stayed loyal, you got the qualifications, very hard earned, you kept your head down, you delivered, and now you've been shown the door. What happened? This is the second episode in our 6-part series on the broken career ladder in accounting, and there's a lot of things changing the game. In episode 1, we asked whether the entry-level accounting jobs are dead. We're hearing a lot of news stories about people struggling to find jobs and coming out of university courses and looking for that next step up, that entry in, and it's not happening. So in that episode, we looked at how automation, AI, rising education costs, it's shrinking the junior, more traditional roles, and it's leaving new talent with fewer ways to get a foot in the door, to get onto the ladder of the profession. And we also explored what some firms and new entrants have to do to survive the shifting landscape. For this episode of the Accounting Influencers podcast, and I'm your host, Rob Brown, I want to move on to the next rung of the ladder up in the hierarchy, the org chart, the career structure. And today I want to answer a more disturbing question: why are firms cutting experienced staff who did everything right? You hear all the time about big corporates, and some of them are being the big four firms and even mid-tier accounting firms who are laying off staff. Maybe they overhired during COVID and wanted extra capacity, but we know how the game is changing. If you're a manager, a senior associate, rising supervisor, director level, this episode is for you. But it's for everyone in accounting firms to know how this all fits together when you're in practice, and how to play the game. And as always with this show, we appeal to you as the audience to stay relevant, to stay informed, to stay upskilled, and to know the environment that you're working in. So you've got authority, you've got a personal brand, you've got a voice and a say in what's going on. We're essentially equipping you to have your hands on the steering wheel of your own career, if possible. So if you're a leader in a firm and you're wondering why the middle layer is being eroded, this is not just a blip. It's structural, it's widespread, it's called the hollowing out of the middle, and it might already be affecting the bench strength of your firm and future leadership, succession stuff. So it's not about underperformance, it's not about lazy employees, it's not about a lack of grit or even a lack of fit. These layoffs are happening to performers at all levels, talented professionals, people with years of experience, people who have followed the rules. So what exactly is going on? Well, there seems to be 3 things that are driving this hollowing out of the middle. First, yes, overhiring. The post-pandemic firms, they staffed up like crazy, they filled in their numbers, talent was scarce. We heard a lot about the talent pipeline. So we hired and overhired. There's been growth, yeah, but the anticipated growth, maybe that didn't materialize, or the kind of growth that came in was well served by AI and automation and people that were already in the job. So attrition slowed and firms found out they had too many people, too much cost, not enough work, even though we seem busier than ever, don't we? So that's the first thing, potential overhiring, which means you've got overcapacity. Second, automation. AI, software tools, they've removed a lot of the data entry, the mid-audit level, the tax tasks. Firms like KPMG's Clara or PwC's Halo, the platforms like KPMG's Clara, PwC's Halo, they don't just crunch the numbers, they make judgment calls. They're straight into the advisory world, and the work that used to justify teams of 5 are now being done by 2. You hear this across all corporate professional life. Efficiency wins, headcount loses, particularly if there's private equity squeezing firms on efficiency and headcount and profits. So we've got the pipeline and overhiring. We've got automation. Third, new client expectations. Clients want more strategic insight, more tech integration, more value for what they're paying. They're much less willing to pay for review layers or lower level management accounts, lower level advisory, admin heavy roles. They're not stupid. They know that technology is changing the game and making the accountant's role so much easier in many ways. And a lot of stuff that used to take accountants months poring over spreadsheets can now be done with the push of a few buttons. I'm simplifying, but if your job is to check someone else's work and a system can do that instantly, the value equation shifts fast. I might add one more thing into the mix here, which is outsourcing. The outsourcing, offshoring model has become more and more accepted over the last few years. There are so many players out there, some good, some not so good. But most firms are looking at outsourcing, and a lot of firms are employing it right now. So what work do they give to these people? Yes, some entry-level stuff, but more and more as the outsourcing model proves itself, and there are a lot of smart people out there, you can outsource higher-level work, even advisory work and a lot of analysis work. That's traditionally the middle layer. So you take this out, there's less teams to manage, less lower-level jobs to manage, less bossing going on. It's shifting the whole game. So what does this mean for you if you're in the middle? If you're feeling squeezed, and I'm going to do another episode on the signs that you might be made redundant, you might be being laid off, your job might be in danger. So, but that's a different thing. Your job title is not your identity. Your tenure is not your insurance. Just because you've been there a long time doesn't mean you're going to stay there a long time. It used to be the case, but your current skill set, is that enough? It might not be enough. The upside of this situation is that you are well positioned if you're willing to adapt. You might not have the job title that keeps you there. You might not have the tenure that would keep you there. You might not have the skill set to keep you there, but there are things that you can do, particularly if you can get ahead of this. You need some leverage. You need some career capital. You understand the technical side of things. You understand the workflows. You've built relationships. You've got some leverage, but that might not be enough career capital to keep you in the game, particularly when layoffs start happening. So you've got to evolve. What have you got to do? Number one, you've got to build your advisory muscle. Dig into the complex. Dig into the value-added stuff, the project-based stuff, the consulting stuff. There's a lot of great outfits, communities out there, bodies of work, experts, consultants that are teaching you how to do the advisory stuff, how to package it, how to price it, how to deliver it. You've got to build that muscle. You've got to move from compliance to contribution. Our compliance is not going to die, but it's less and less valued, isn't it? And it's more and more automated and outsourced. So you've got to speak the language of business. You've got to think more entrepreneurially. We've done episodes on that before. So business acumen, commercial awareness, build your advisory muscle. That's number one. Number two is to establish a market position, to own a niche. Think about your personal brand. You've got to find something you do, something you're excited about, something that sets you apart. You've got to make it your thing. It could be an industry vertical. It could be a service line. It could be a tech platform. It could be a particular geographical location. But you've got to own something and stand out in that niche. It's hard to stand out when you're trying to be everything to everyone. It's personal branding, reputation building 101. You've got to specialize. So pick some lanes. It doesn't have to be one necessarily, but you've got to be willing to say no to some stuff and become an expert in other stuff. So that involves looking at your network, looking at your client base, seeing where you've had big impact, seeing what drives you passionately. So that's the second thing, is to own a niche and define your market proposition. Number three, slightly related to number one in terms of the advisory muscle, but it's strengthening these commercial instincts that you've got. So you've got to understand pricing and margin and utilization and scope creep. You've got to be able to price better. You've got to be someone that thinks like a peer of the buyer, a peer and partner and trusted advisor of the client. You've got to think like a partner. The partners are less dispensable, although next episode coming up, I'm going to talk about the partner and how they're getting squeezed and fighting for relevance. So strengthen your commercial instincts and understand all of these skills like pricing and selling and presenting. And you've got to make yourself really valuable. The fourth thing is invest in your influence. Now, this show's all about that, but you've got to have a presence. Visibility is a strategy for survival. So you've got to start showing up, maybe speaking at events, building your network, posting insights. It might be LinkedIn, running workshops, volunteering for things. You've got to build that internal visibility within the firm, within the brand. Might be multi-offices. You might be part of an international network or alliance. You've got to build that internal personal brand, but also externally. What's your LinkedIn profile like? That's one of your shop windows. That and your About Us page on your website, they're the two places you show up externally, unless you're on other social platforms. So you've got to be more visible. You've got to be more vocal. And as accountants, I know you don't like hearing that because it's not natural to you. We're not good at selling ourselves. We're not good at personal marketing. We've done episodes on that as well. It's exactly the kind of thing we talk about on this show, is how you position yourself and sell yourself without being cringy and without being salesy. So a few things you can do there to upskill and get ahead of the game so that you are more employable and less likely to get laid off. But what if you've already been laid off? Let's just address that for a moment. This mindset stuff going on there, isn't it? This self-worth, this identity. You're not broken. You're unallocated. You're in between empires. You're in between roles. And there is a difference. So you've got to position that in your head. But the job market is tough out there. We hear a lot of people that get out or get pushed out and they can't get back in. You see horror stories on TikTok and YouTube and everything else about people applying for hundreds and thousands of jobs. So yes, get ahead of this, but if it does happen to you or you can see it's happening to you, this is a great time to rebuild your personal brand and upskill. So you've got to be out there talking. You've got to share your ideas. You've got to put out thought leadership. You've got to share your opinions on things. You've got to comment on things. You've got to showcase your expertise, posting insights, reaching out to people, having conversations. You've got to let the market know that you're alive, you're awake, you're in the game, and you've got something to say. And I help professionals do this. I interview them once a month, some of the clients that I've got, and we turn that video into video snippets and thought leadership and articles and things like that because it amplifies your voice and amplifies your message. So if you want help finding that voice, creating the content, clarifying your value, ranking up your visibility, reach out to me on LinkedIn. I can help with that. Let's talk about why this works. A lot of people do feel stuck, a little bit scared, a little bit invisible, a little bit irrelevant in the firm. You've got to build or rebuild your presence. You've got to position, showcase your skills. You've got to upgrade them. You've got to keep doors open. And this isn't about making you a TikTok star or a rock star on LinkedIn. It's not about having thousands of followers and lots of engagement, but you still got to be putting it out there. People will see it that you don't know. And by the time they come across you or your name and have a conversation, you want them to be warmer to you than they were before. So that's what that personal branding stuff's all about. You're helping people see who you are and you're showing them that you are in the game and you've got ideas. In the last episode, we talked about the death of entry level. This episode shows what happens when firms don't build the clear path up. Yeah, you can rip out the bottom of the pyramid, but you've still got people in the middle. Once that starts to dissipate as well, the middle gets hollowed and the talent leaks out. Succession plan dies because these people at the top, they've got to get out somehow. 75% of accountants are at or close to retirement age. It is an aging profession. So where's the middle tranche coming up behind these people? So you've got a few things to do there. You've got to be mindful of this. If you're a partner, a leader, a boss, this is what your people might be feeling, might be going through. You've got to talk to them about it. And particularly if you've got private equity involved, a lot of things are going to get squeezed and scrutinized. You've got to help steady the ship. So next time we're going to go even higher. Episode 3, I'm going to talk about the next uncomfortable truth. What happens when senior professionals lose relevance? What happens when you're near the top and you feel you're drifting or you're not in tune with what's going on? You feel a little bit on the outside. You feel a little bit vulnerable. These people, they used to know it all. They used to be super connected, but they may be outpaced by technology or ignored by younger and younger clients, unsure of what their value really is, unsure about legacy, unsure about when and how they get out. And if that sounds like you or someone you are mentoring or coaching right now, then check out this next episode. We're doing this 6-part series. We're walking through every level of the accounting profession. And you know me, I'm a straight talking Englishman. I don't sugarcoat anything, but I just want to show you ways to stay relevant, to stay visible, to stay valuable, to inoculate yourself against what's happening with the economics, with the politics, with the private equity, with the AI and the technology. So thanks for listening. I'm Rob Brown. This is the Accounting Influencers podcast. Check out the rest of the series. We're on YouTube as well, so you can go there. And if you're ready to build your influence and bulletproof your mid-career brand, do reach out and we'll have a conversation. We got tools that can help you rise above the noise and give you some capital and some ammunition with these shifts that are going on. Have a great day. We'll see you on the next episode.